Hello and welcome to this Forex Preview at xm.com. We'll be discussing the upcoming jobs report out of Canada and the potential reaction in the loonie. I'm Maria Pachurdes, and joining me is investment analyst Melina Deltas. So Melina, back in December, Canada's jobs market added 104,000 positions, which surpassed economists' expectations. What are we likely to see this time when the data comes out on Friday? And do you think the numbers might impact the Bank of Canada's upcoming interest rate decision?
Yeah, hi Maria. The first employment report of the year will come out this Friday, but it's possible that it won't get as much attention as previous reports. The Bank of Canada recently gave signals that it may have hiked interest rates for the final time during the current tightening cycle, while the Federal Reserve has a couple more scheduled and the Canadian dollar has fallen against the US dollar as a result. But authorities will continue to keep a tight eye on the employment report, since Canada's labour market could come back to haunt those who bet that inflation has been fixed. With an unemployment rate of 5% in December, Canada's economy far outpaced market expectations, which had predicted a gain of only 8,000 positions and reached its lowest level since June and July's record low of 4.9%. Economists believe the labour market's momentum slowed in January, and this Friday's employment data may offer confirmation. So there is a prediction of a moderate growth of 15,000 positions, which will push the unemployment rate up to 5.1%. And investors are more persuaded that the bank's monetary policy is tight enough to contain inflation. The median real GDP projection is 0.4% fall in 2023 and 2% growth in 2024. Despite the expected decline in short-term inflation later in the year, expectations remain strong. The bank estimates that Canada's economy expanded by 3.6%, but it will slow in the middle of the year before picking up speed again in the second half.
Okay, so taking all this into consideration, what's the outlook for the loonie?
A big beat in headline employment or wage growth might send Canadian currency to new highs, since the Bank of Canada hasn't ruled out rate hikes. If Friday's Canadian jobs report is more optimistic than anticipated, the dollar loonie could breach the crucial 1.3260 support level, and a stronger than anticipated report could send the market lower to 1.3225. Alternatively, dollar loonie might penetrate the pattern to the upside by revisiting the 1.3515 resistance level prior to the 1.37 psychological mark, before the focus goes to the 29-month high of 1.3980, and the 1.3815 barrier will also be tested. In the broader outlook, the pair is looking neutral at the moment, and aside from the US, WTI crude oil is increasing as a result of the dollar's minor depreciation and optimism that China's economic openness.
Melina, thanks so much. And thanks for joining us for this Forex Preview here at xm.com.